The larger stocks, you know, the ASX 100 and ASX 200, are incredibly well covered by analysts and the buy-side community as well. So there's a lot of people looking, you know, a lot of eyeballs on those companies, and therefore valuations tend to kind of adjust to reasonable values much more quickly. At the microcap end of the market, often there might be one analyst looking at it, or maybe no one, and so you can just, and there's thousands of companies that you can have a look at and thousands of opportunities. So it is just possible in the microcap end of the market to find undiscovered gems, and they're growing fast and they're at a reasonable value. My strategy, as I said, is just to talk to a lot of people, to be very open-minded as well about who I'm talking to, not to get sucked in by a good presentation, but to actually listen to what someone's saying and to think about where the opportunities are and is that realistic. So I ask a lot of questions. I push back on people as well, just to test them and to test their confidence and commitment, I guess, to what they're talking about. And yeah, as I said, I'm trying to be very open-minded as well. And you know, I give you an example. So there's a company that I've looked at whose managing director is quite young and has a lot of tattoos. And if I was quite closed-minded, I would have gone, well, I don't want to invest with someone like that, being an older person. And but it's been one of the best investments I've made. So I think you just have to constantly challenge what looks good and be very open-minded, because with things like, you know, batteries and lithium and things like that, it's a whole new sector, and I think we have to be open-minded to the opportunity. I think it is a lot more difficult as a retail investor to find those opportunities, but in saying that, I think just look around and see the sorts of companies that you're, you know, constantly having interaction with, and maybe just look at your everyday life to see, you know, oh wow, like I game, so therefore Playside Studios, you know, maybe has produced the game that I like to play, and investigate it that way. But definitely, I think as a professional investor, having access to management gives us a massive advantage. So my view is that a lot of smaller companies can absolutely continue to do well, even in a more challenged environment. And I personally actually don't think the environment is challenged. I think consumers have got a lot of money behind them. A lot of people have locked in interest rates. So I'm very positive about the outlook for the economy in the next 12 months. Interest rates are going to go up, but nevertheless, I think economic conditions are going to still be pretty robust. And so smaller companies where they've got lots of opportunity to grow market share or grow into new businesses and new areas, I think they can continue to do really well. In terms of protecting your portfolio, in markets that are going down, I mean, really cash is pretty much the only safe place to be. So we tend to keep quite a lot of money in cash. As I said, at the moment, it's about 30% of the portfolio that's in cash. That gives us quite a few opportunities as well, because it means that when the market falls, then we've got cash there to take advantage of opportunities. And I was in the market last week buying some things that had fallen quite a bit that I thought, you know, now look quite good value. So I think the ability to move your cash around, to sell things quickly if you feel that things aren't going the right way, is important. And also just think about it over the long term as well, not a 3-month or 6-week cycle. Yeah, so I added to my position in Pure Profile last week, and that's a business that provides market insights to companies. So they operate in Australia, in the UK and in Asia. In Australia, their biggest customer is Flybuys, and they've been growing really quickly in the UK, and that's where I think their opportunity really is. They've just landed a big contract in Asia, so the Asian market's now open to them, and the blue sky for them is moving into the US market. So plenty of growth ahead of them, and trading at quite a low multiple as well. The other stocks I like are Coventry and Frontier Digital Ventures. So Coventry is a really solid, well-run business that I think you can own through the cycle and sleep really easily at night. It provides industrial hardware to the manufacturing and mining industries in Australia. And I think at the moment, with a lot of companies bringing manufacturing back into Australia and trying to avoid China, then it's in a really good position. Management turned the business around a couple of years ago, business is in a great shape now, and I think they're in a really good position to actually start to consolidate the industry as well. So there's plenty of acquisition opportunities for them as well. So Frontier Digital is a business that we've owned for a number of years now actually, and continue to see fantastic opportunities ahead for them. They invest in emerging markets into online businesses, so mainly like a mini car sales or realestate.com of the South American market or the Pakistan market. So Sean, the managing director, started working at REA when REA was just starting to take off in the Australian market many years ago. So he has real experience in understanding fledgling online businesses, and he's taken that experience and he's put it into emerging markets, as I said, in South America and Middle East and Asia. So there's tons of opportunities there. He only takes a number one or number two property, and then he just adds his expertise, and he's seeing extremely fast rates of growth in the businesses as they benefit from that expertise. So those markets have all suffered a little bit from COVID, but are coming out of COVID as well. So they're a reopening story to a certain extent, but more than that, I just think that the opportunity for those markets to grow and mature is huge, and it'll be a very big company at one stage.